Welcome to your monthly market report for September 2022. My name is Marcos Oliveira. I am your real estate agent and an investor here in South Florida. And today I'm going to go over with you, the mortgage rate projections from our experts. I'm also going to be talking about prices, home prices, and then I'm going to wrap it up this video with home affordability, which is definitely something that it's on everybody's mind these days. Folks that are thinking about selling or buying a home. So stay tuned for all of that information. So I'm going to begin today's conversation speaking about mortgage rate projections from the experts. And one of the things that we can all probably agree is that this year, the house market has truly been defined by the rising of mortgage rates, right? And if we look at the next slide, this is a look at the Freddie Mac 30 years fixed rate going all the way back to January. And if you follow along with the zero, you've probably seen this before. But what really shows is how much mortgage rates really rose from the beginning of the year all the way to mid and late June. And since then, you can see that there's been a lot of volatility or fluctuation on the mortgage rates over the past few months, actually. So why is that? Well, one thing is for sure, we know that the Feds are certainly making moves right now to ease the inflation. And then when that happens, mortgage rates tend to respond. And you can see that on this data. And those are the things that we have to keep watching and try to figure out what's going to happen with all those different economic factors that impact mortgage rates and how that's going to play out over time. Now, one thing we can do in the meantime as we're watching all those different economic factors is to actually turn to our expert and ask the question, what are the projections of our rates moving forward? And everyone wants to know where are the mortgage rates are heading. And if we look at this projection, for example, this is from Freddie Mac, Fannie Mae, MBA, and the NAR, National Association of Realtors. And these are the latest data we have from August. And then if we average all of those projections together over the next 4 quarters, what we can see, on the right-hand column there, at the last one, what we can see is the mortgage rates are projected by the experts to essentially stabilize over the next year. So really looking at this and trying to figure out what's going to happen with the mortgage rates and what we can see, the experts are actually feeling that the Feds are going to get inflation under control. And if that is the case, then the mortgage rates will stabilize. And that's certainly what we were looking for and hope that the experts are correct in these projections. And we continue to watch that all the way to check not only the mortgage rates, but also everything that drives the economic factors around us. And, I wanted to share this quote from Lisa Sturtevant. She's a house market economist that we follow here. And what she says is, after the end of the summer lull, as mortgage rates stabilize, we may see a return of buyers and a relatively strong fall housing market. And if that really happens, it's a great news. If mortgage really stabilize, we may see more buyers coming back to the market. So another topic that is on everyone's mind is home price appreciation and where our home prices are heading, right? We all wanted to know that. And what I'm going to do today is break it down, home price appreciation, because this can get a little bit complicated. And I'm going to do my best to explain, because what we're hearing right now, is that home prices are appreciating, but then we were talking about deceleration. And then we were seeing some markets, sellers actually bringing their list prices down. So there's a lot of confusing information out there, and I wanted to do my best to share this with you. And I wanted to start once again with a quote, and this is from Mark Zandi, chief economist of Moody's Analytics, and he said, "I don't think that national housing prices will decline in a meaningful way, but there will be some prices decline across the country." And I think that this graph really helps to articulate this. This says the depreciation is slowing, not depreciating. And that's where deceleration comes into play, right? So let me walk you through this. This is a percentage year over year of home prices increases for 2022 so far. And this data is from CareLogic. This is the latest data that we just released. And what you can see here is that year over year, January, February, March, home prices were still accelerating at a pretty rapid pace, record-breaking home price appreciation at the beginning of this year, as you can see on this graph. But what has happened since then, well, we come off of that high 20% year-over-year home price appreciated in value, but now we are at a much slower pace, right? That's the effect of decelerating that is expected to continue. So that's what experts are starting to see as they look forward. So again, appreciation is slowing, not depreciating, and that's important to emphasize. And I think that this quote from CareLogic really helps to articulate that. It says, annual home price growth slowed for the third consecutive month in July, but remained historically elevated at 15.8%. That's the graph that I just showed to you guys. And then as 30 years fixed rates mortgage near 6% this summer, some prospective home buyers pull back, helping ease overheated and unsustainable price growth. So some of our buyers pull out of the market, and that kind of easy the whole overheated market that we were seeing at the beginning of this year. So, and we know the past 2 years have been unsustainable, has anomaly, and looking ahead, CareLogic expected to see a more balanced housing market with year-over-year appreciation is slowing to 3.8% by July of 2023. Now, what I also wanted to walk you through is the fact that many experts raised their home price forecast this year, and this is very interesting. So, and it's also very typical. What you can see here that these are our January forecasts for 2022 home price appreciation. That's what you see in the middle column. Compare with the latest forecast, and those are on the right-hand column, the green column. So what usually happens as you start a calendar year, the expert project out what they think home prices appreciation is going to be, and they do so looking at buyers' demand. They're looking at supply, inventory, all of those different things that drive home price growth, and they project it out for the year, right? Now, as the year goes by, experts tend to reforecast based on what's actually happening in the market. And so that's what you can see here, that this year experts, even though prices were decelerating, they reprojected up to a higher home price appreciation for 2022 calendar year. And that's what you see here again on the green column. So we're hearing all of these different terms, and we're seeing these home prices forecasts. Trying to make sense of all of this, it's very confusing, but what experts really saw at the beginning of the year was that we probably were going to see more inventory coming into the market, but as the year progressed and they realized inventory is still pretty low, so once they reforecast up, that's what, again, the green column there, we are projected to an appreciation higher than the beginning of the year. So then we have to ask, what does that look like for 2022? And we bring this graph to you very often to show you the latest home price projection for the year. And the average of all 7 forecasts that we follow is showing 11.3% annual appreciation for 2022. Now, that's vary from region to region, but what we're looking here is the totality of the national average, and that is showing 11.3%. Now, why is that? Well, that's because inventory is historically low. That's one of the factors, right? And if you look at this data from calculated risk, this helps us compare where we are today versus where we were over the past few years. So if you look at the blue bar on the left, you can see that inventory was 26.3% higher than it was, the week ending September the 2nd of last year. So year over year, comparison for the last week of August and into the first couple of days of September, 26.3% more inventory. So that is creating more opportunities for buyers. It has helped the softening of the home prices, the decline of the home price for sure. But when you compare the same week in 2020, inventory is still down 5.4%. And then if you go even further and compare with 2019, prior to the pandemic, inventory is still historic low, down 42.2% from where we were that same week in 2019. So that's what's continued to drive upward pressure on home prices. And then of course, anytime we're talking about mortgage rates and prices, we know that impacts affordability as well. So let's just take a few minutes and to talk about affordability. This is a topic, once again, that I think it comes up in a lot of conversations, mainly right now in the media. People are saying, are homes even affordable right now, right? And I just wanted to break it down, affordability, from a couple of different perspectives. So we're going to start here, with the Housing Affordability Index the National Association of Realtors releases. And they release that every month. And then the way you read this is 100 reading of the House Affordability Index is really an even reading, meaning if you are on that dot line there, which means 100, you're breaking even, meaning the average individual, the average household in this country can afford 100% of the average mortgage payment. That is only if you're breaking even. We are 98.5. We're below that, so that's not a good news. And that's the reason why you hear, affordability. Can we even afford buying a house these days? Do we make enough money to afford that mortgage payment, right? And this is something that we have to keep an eye on. Yes, it's less affordable, but what I can see it, and what the experts is saying, that this is certainly not a good position to be, but it's also not a apocalyptic scenario by any means in the housing affordability. This is something that the National Association of Realtors came up with, and which is, I think it's very interesting to point out, because they talk about the mortgage rate payments. And it says that compared to 1 year ago, the monthly mortgage payments rose to 1,944 from 1,265. And that's an increase of 53.7%. So again, homes are less affordable right now, and mortgage payments have been increasing. So if we take a look at this graphically, this is what this looked like going all the way back to the last reading of June. That is the most recent information that we have in this statement that I just gave it to you from NAR. Another way that we can take a look at what the information that NAR just shared with us in regards to the monthly mortgage payment, we can start breaking down affordability even further. And as you can see on this graph here, what we're looking at is the average mortgage payment or income committed to a mortgage payment. And right now, that average sits at 25.4%. And this is assuming a 30 years fixed rate mortgage with a 20% down on a medium price home with a median income. So we have to go back to the affordability equation, the median income and then the medium price home. And what we look here, that somebody is dedicating 25.4% of their income for the housing payment. And why is that important? Well, that is important because what is recommended typically is that percentage does not go over 25%. 25% is the maximum that is recommended. So we are, again, slightly above that. As you think about housing, one of the greatest benefit of buying a home versus renting is the fact that you can refinance as the rates decline at certain times. And I'm not certainly suggesting that somebody should buy a home based on just the opportunity to refinance, but this is actually something that we wanted to remind people, that you can buy a home as prices are rising, which is certain what is projected, right, by the experts. And if there's an opportunity to refinance, you can do so down the road. And that's important. It's crucial for homeowners to know and to keep on the forefront, when you trying to make a decision on whether or not buying a home. And then if we look any further, breaking this down, we can look at the median household income versus the qualified income. And here's where it becomes very, very clear that this is not the same thing across the country, right? You can see in every region we have different numbers. If you look at the West, for example, the qualifying income that what you need to buy a home, it's certainly significantly higher than what the median income is. So you can predict that the houses are less affordable. In the South, they're neck to neck. They're almost the same. In the Midwest, median income is higher than the qualifying income. So bringing that to your own local market is critical and is crucial for you to make a decision. So that's why I'm bringing that to this conversation. And then if you look at this graph here in the U.S., the average throughout the U.S., it's also sort of very similar. The median income in this country is 91,952 versus a qualified income to have it to have a mortgage is 93,312. So certainly seeing the rise of interest rates, lessen the buying power. So the higher the rate is, the less power of buying a home we have, and we're definitely feeling that, and we're seeing buyers just staying standby as opposed to making a move right now. So as we come to the end of this presentation, I just wanted to wrap it up with a couple of resources that can be useful if you're thinking about buying a home. So first would be expand the search area and criteria. So probably if you're someone that were looking to buy a house near to the city center in Natal, this could be an opportunity to try to expand your search and look a little bit further out, or look to places where things are more affordable than your first choice. Then second, explore alternative financing options. This is critical because there are several different products available out there, and you should speak with your real estate agent or a real estate advisor to help you find a great lender partner in your market, so that you can be able to choose and make a decision on what product will make more sense, financially for you to use, and what products you can be qualified for. I think this is critically important when thinking about purchasing a home. And then finally, look for grants, gifts and funds. This is also something that it could be very useful. Sources like downpaymentresource.com. It's a great organization that you can go and ask questions, and there are again a number of different ways that this organization can help you out, especially if you are a first-time home buyer. All right, we finally got to the end of this presentation. I really enjoyed sharing this information with you, and I hope that you found this video helpful, and that this conversation can really help you make wise decisions in case you are positioning yourself to enter in the market as a buyer or a seller. But I also hope that I didn't confuse you, with the amount of data I presented today. But if I did, please connect with me, and I will do my best to answer any questions that you might have. Again, if you like this video, if you like this content, please, if you haven't done so, hit the like button, share this video with your family and friends. Also, subscribe to the channel if you haven't done so. All of those things would help with algorithm. And so I hope I'll see you next time, and please be kind.